What's up? Good morning, guys. How we doing? Pharaoh Friday is underway. We are 3:48 out here from the close of this 5-minute bar here on NQ. Now, I'm looking at this. Zoom in just a hair. I'm a little, I don't want to say concerned, but I'm a little bit, well, I hope we don't see that. 3.5 minutes out. We shall find out. And you know what? If we do get trader edge, even if it's relatively tight, in that case, we'd be talking 60-ish points. Well, we can either trade the range on a 2-minute chart, pop down, or we can see what we can do on a 5-minute from a discretionary perspective. But let's hope we don't have to deal with that. Let's hope we just crack lower, down 400 points. We'll be up 25,000 before lunch. What do you say? Good morning, guys. How we doing? Gamma, CJ? What's up, brother? Big Alert. How we doing? There you go, bulls. Let's pop over to a 2, see what's going on. HR on a 2-minute chart is 32. And I've got my eye on the wick high of bar 19 here on a 2-minute. As I see a big trade range here starting. Pop back to the 2-minute for a second. Curious about bar 33 on a 2-minute. Again, you got the wick high at 19. Keeping my eye on that. All right, 15 seconds here to the close of 33 on a 2-minute. And then I'm watching that wick high at 19. I think the more probable scenario here is that even if the bulls do crack it, we fade back into the range. We're trying to crack it, man. Yeah, you see that? Pretty clear, isn't it? Alright, so I'm back here sitting on a 2-minute chart. Right now, I'm very curious to see, does this get taken out, which then renders this line irrelevant, right? It returns to a big, wide, soft, bear channel. Maybe. The problem is, we're in a relatively, I don't want to say it's so tight because it's 60, 70 points wide. But with an ATR of, 31 on a 2-minute chart, that's a little tight compared to the ATR. So let's see. I gotta give it a bar or two here and watch. Five-minute chart ATR, damn near 50. Dead smack in the middle of the sideways range. Come on, bulls, bears, somebody. Get cocky. All right, let's see if the Bears can take out that wick low of bar 9. That would shake things up a tad. Nico, which broker, they say, as they're looking for cheap, would you recommend? They say, I don't like funded accounts. Yeah, that's fair. I want to trade my own money. I've been trading, I have some trading experience already, but new to futures. You got options. I mean, you could look at AMP. They are what many would call discount brokerage. Not in a bad way. They're just cheap. It's AMP. The problem is you got to make sure that the platform you want to use is supported. I like NinjaTrader, you know. Not just as a platform, but for a brokerage as well, if you want to run Ninja. But again, if you're looking for discount, you're probably not going to be able to use NinjaTrader, the actual platform, probably, if you're looking to trade personal only. Yeah, I've heard people kind of rave about the AMP and Quant Tower combo. You know, the thing about NinjaTrader, though, is if you like Ninja and you trade, like, even not that much size, like, you can do the math and figure it out based on your trade volume. But with NinjaTrader, like, if you just buy, I think it makes sense if you decide you're going to use them for a while, just buy the lifetime, like, commission membership, whatever the fuck. It makes all the mathematical sense in the world if you're going to use them, even for like a second personal account or even a third personal account. Forget what it costs. Let me look. It's a couple $1,000. Oh, the life, it's $1,500. It's like you do the math, figure out how much you trade, figure out it reduces your commissions by quite a bit. All right, bar 17. Come on now. Okay, so coming out of a bigger bear move like this, I think if you're going to trade the range, I think you got to let this test. Pretty reasonable probability that they'll at least try to crack the wick low at 9. There it is. There's the crack of the low of 9 out of the bears. That's the new low of day. About an 80% chance that this breakout attempt eventually fails, man. Let's find out. Alright, there's the rollover into bar 18. Let's see how 18 operates. Go over to a 2-minute, see what's going on. Yeah, when I'm talking about breakouts, I'm saying either direction. This one just happens to be an attempt to the downside, but when you're in a big sideways trading range that's meaningfully developed, approximately 80% of those attempts are going to eventually fail, and here we are failing right back into the range. A lot of traders get tricked by this over and over and over, and then they wonder what the hell happened. You were fooled, is what happened. Question, if 80%-ish of breakouts in sideways ranges fail, curious, why do you stay away from reversion scalps? Well, on the breakout attempts, I'll stay away because it's too hard to manage risk. There's probability and then there's reward to risk. Traders like to think, at least beginner traders, always think only in terms of, well, either reward to risk usually, or they'll ignore that completely, more rarely, and focus only on probability. It's both, guys. We can't talk win rate or reward to risk without talking about the other. Nico, what is witching? So quad witching happens 4 times a year, and it's when a whole bunch of a whole bunch in 4 different instruments, I suppose, all expire on the same day. And everybody likes to scream and shout about witching, and they go on and just fucking lose more money. Look, focus on price action, big dog. Everyone talks about witching like it's this big oh my god, it's quad witching day. And then it's like, what does that mean, dude? They're like, I don't know, but it sounds important. And then they go on and do random bullshit all day and have no edge. I don't care about quad witching. Who gives a shit? If the market moves, it moves, and I'll trade the move. Man, people trip way too much over stuff. It's like people are going out of their way to be focused on everything that doesn't matter. And you know what? If we see an increase in volatility because of quad witching, so be it. I'm going to the truth, which is price. Price will tell me the truth. I don't need to sit and have fucking anxiety about quad witching all day just for nothing to happen. Or if something does happen, I would have achieved the same result by just looking at price and ignoring the fact that witching is a thing completely. You know what I think it is, guy? I think all these, like, infatuations of traders with shit that just doesn't matter is a distraction tactic mentally to distract themselves from the fact that they have no fucking clue what to do. They're like, they're very uncomfortable with their decision-making process, which I was too. You have to have some kind of reasonable, repeatable methodology to make decisions, otherwise you're going to be insecure about your trading. Straight up. So people come up with it's quad witching. And then they go on fucking Reddit like a weirdo and talk about quad witching all week. Just to do nothing about it. And then volatility does nothing anyway. It's like, maybe I should have just focused on price all week. Yeah, homeboy. Why is it hard to manage risk for a breakout attempt, Nico? Well, if it were a small bull body up in this region, this is more of a moderate to bigger bull body, it wouldn't be. The problem is 4, 5, and 6 are bigger, so it's like, what am I going to do? Risk the wick high of 4? I could risk the wick high of 6. That would make more sense. The problem is a breakout lower. I'm not picking a pre-market or overnight level. I'm not picking a level from 2 weeks ago. I'm trading intraday. What does that matter? So what am I going to do? It's going to be an arbitrary stop, which I have a hard time justifying arbitrary stops like that. Plus, coming out of a bigger bear move into a sideways range, I'd rather, if I'm going to trade the range, trade it to the short side. In a case like this. All right, big bar 20. Open it up. Big sideways range. You know, again, if I'm going to trade this range from a discretionary standpoint, I only really want to do so to the short side. This much makes my life so much easier. And, you know, you get to pick wick high of 8, wick high of 6, wick high of 4, which I'm not going to go for the wick high of 4. Oh man, Chuck Norris passed away? Oh Jesus. That sucks. Well, killed that shit for 86 years, man. Come on, you bulls, take this thing higher. All right, Bears trying to take out the low of day once again. That wick low is 17. We'll see if the bulls pop it right back into the trading range. Again, at this point, the more this develops, I start getting interested if the bulls can take this thing back higher, up toward the wick highs of 8, 14, 19. Come on, Bulls. I want to see you get a tad cocky. ATR is holding up. 48 here on the 5. Our 226 out here from the close of bar 21 into the open of 22. Minute 10 out here. Range on this bar still just at basically 1 ATR. Seconds. There's the open of 22. ATR 47. Oh, you bulls! Come on now, man! We've got this 2-minute bar closing kind of right at the top of the lower third of this range, which is not great. Back to a 5. Whoa. There we go. Hey, Tara, holding up, man. 48. 48 here on the 5-minute. All right, let's see if the Bears take out this wick low. If they can, about an 80% chance that breakout attempts eventually fail. Oh, man. All right, back in 2. Don't you go any... Ooh, wait a second. Wait just a damn minute. We just got news or something. Nothing coming through my wire yet. Right back into the range. So, you know, when you get pops like that, if you're on the inside of the, meaning the I don't know if this makes sense. If you're on the inside edge of the range compared to the day, right? So I would call this kind of the outside. It's kind of chilly down here. We haven't seen that price yet. Whereas this is inside the down push, right? When you're on the inside, if you are going to trade the range, again, it's certainly more discretionary. Gotta keep that in mind. It's more advanced than traditional regular RAM trading. If you want to short this above the wick high of 19, 14, 8, and use maybe the wick high of 6 to manage risk, that's fine. But you got to keep, you know, that to me looked like news. And a lot of times when news hits, it's 50-50 while the price is trying to find some sort of balance. You just as easily could have this thing pop up to 24,460, you know? So, while in hindsight, it's like, oh, missed opportunity, right? That bar was moving, man. I gotta let it chill out. This range is crazy. All right, back into. Don't go anywhere. What's up? Welcome back. Bar 26, 342 out. Sitting right in the middle of this sideways range. Should we see what a 2-minute is doing? Zoom out here a hair. Yeah, let's head back to a 5. Man, can you believe it? 23, bar 23 that is, has the ATR up. It was 48. We're now sitting at 51. While simultaneously being in a, what? Maybe 70-point wide trading range? It's kind of crazy, honestly. It's a good thing that we're maintaining that, but it's kind of nuts. Man, a 2-minute chart is just a mess. Man, this range. Now, I'm very curious. I'm going to run a poll. And you're going to vote, and you're going to be dead honest. It's unfortunate that I have to even say this. It's a big range day. How we doing? Poll is live. Not too bad, huh? Good. Take a quick peek here at the E-mini. to our 11 over there. Okay, so overarching context, I mean, clearly big trading range. Now, look, I get it. It's really easy to start looking at this like that. And you're like, you buy beneath 27. I get it. I get it. If you can, look, I'm not going to put my thumb on you. If you can manage your risk, wick low at 24, wick low at 17, you're not even really betting on the breakout if you're getting long down here. You would have gotten an entry, of course. But what you need to understand is there's a lot less edge on that than there is on like a traditional RAM setup, which is why I always say this starts getting more complex. So if you're going to hear me, I need you to really hear me. If you're not profitable yet, stick to the higher average edge basics. Good context, soft bull or bear channel, or a trend, traditional continuation trades, A minus quality stuff, maybe a couple smaller size limit order reversion scalps in soft bull or bear channels. Just get to the point where you're at least positive ROI. Okay, then if you want to throw in the higher volume, lower edge stuff, you can afford the volatility that's going to introduce into your P&L, right? If the trades, you ever heard the saying, you'll get 80% of results from 20% of actions? That's true in exactly this. A big chunk, well, more than likely, more than half of your results are going to be from the really high quality traditional RAM setups. Probably well over half. But as time goes on, if you're like, well, I'm making a lot of money, I have a big enough sample size to start sliding in other scalps that have lower edge, take longer to work out. I don't mean each individual trade, I mean the numbers. They take a bigger sample size to work out because the edge is smaller. Is this making sense, or is this confusing everybody? As you get more advanced, you can afford to mix those in if you want. Now, if you don't like being more active, then you never really have to do that, but Oh, you bears, bulls, somebody! Man, Pharaoh Friday, we're supposed to be partying right now. We're all sitting here in a circle, no one's talking. Come on, market. Do something. And somebody get Donald Trump his iPhone. That'll get it started, man. Come on. Yeah, the more risky range trading is more for evals rather than PAs. Yeah, 100%. 100%. And in personals, you know, maybe you size down on the lower edge stuff. Fine. Fine, just so that volatility, that P&L volatility, blends in more with your equity curve. I really think one of the most fundamental issues in the entire trading industry is that people don't really think about this business the right way. Because the right way is hard to get attention by talking about, I guess. You know, I mean, it's a lot easier to just, to someone who's never traded before, it would be a lot easier to just show your Bugatti and say, I take one trade a month. Because people are inherently, they don't want to do too much stuff and they want to make a lot of money. So I guess that makes sense. But in actuality, this business is numbers, which are fucking boring. But you know what's not boring, homeboy? The result. And not having to go anywhere to work. And having no ceiling. And having no boss who decides he doesn't like you anymore after 23 years. What's that about? ATR 47 here on the 5 minute. There you go, balls. We'll go ahead and bet on this range here. And, you know, I could use the wick high. That's too far. I'm going to use the wick high at 23. Keep this more of a scalp. Get rid of this. I'm already looking at too much. Let's see if the bears want to take that baby down. Respect. Oops! There you go. Like, where's the P&L? There it is. Probably a little slower trade here, even though ATR is pretty good. We got 44 on the ATR here on a 5 minute. Just betting on the range, that's all this is. All right, Bears, step on in. Let's respect that big trading range, man. Now, by the way, I think that there are a lot of traders that don't really understand this next portion, what I'm going to say. I'm using the wick high at 23, which that's less than 1 ATR of risk. So what does that do to probability? It makes it go down. If you want to increase the probability of your trade, you have to increase risk compared to your potential reward, right? That makes logical sense, correct? So you can use the wick high of, 6, or you want to take it to the extreme. You want to greatly increase probability. You can use the high a day. That's obviously extraordinarily far away. You got to make sure the math makes sense for you. But it's always a sliding scale. You got to just make your best decision. And then remember, if you're trading, a personal account, you have a bit more freedom than if you're trading prop. And if you want to, if you're looking for more of a swing trade, you're like, well, I'm going to go to lunch. I'm going to go mess around all day. I have, it's 9 a.m. or whatever. I'm putting on one trade. Well, that's, one of those cases where you can size down a bit and you can keep things wide. Let it take its time. You got all day. You're not even going to be here. More of an intraday swing. So again, when you have a big sideways range, and we'll see how this trade ends up, right? But just in general, you have a big sideways range. I'd probably draw it a little more like that. The market's always going to try to convince you that it's going to break. Now, 80% of those will eventually fail. Now, does that mean that it doesn't go and take my stop and then fail? No, that could happen for sure. But you got to put your stop somewhere, right? ATR falling a bit here, 41 now on the 5-minute chart. Bulls trying. Get those bears stepping in. Come on now, bears. That's a big range, man. So we got 3 minutes left here on bar 31. All right, minute 27 here till bar 31 closes up. My bear's getting bullied around here, man. All right, cut it there, 46.92. Oh, look at the 2-minute chart. I just don't buy it yet. All right, be right back. All right. Welcome back. Now the question becomes here, we're a minute 25 out. The question becomes, what do you choose to believe? Big range? Maybe a wedge? Or a soft bull channel? Let's watch how bar 80 closes up here on the 2 minute. Big old wick. Man, I still think we got a big trading range down there. This market is not acting, at least not yet, like these bulls are too confident. Need a lot of wicks. That bear body on 32 is relatively sizable compared to 31, which was the that first bar to close outside the wick high at 23, right? Plus, we got that 50% retracement point right around that wick high of 6-ish. Alright, let's see what the bulls got here. 31 first bar closing outside the wick high at 23. ATR 42. Let's see if the bulls can close it above the wick high at 31. Closing it basically right at the wick high of 33, still inside the wick high of 31, so I'll watch 35 on a 5-minute. Very possible we just get a trading range here, which would be this. Oh, let's see. Ideally not. Ideally 35 here pushes. See, you have some options here now. You can start if you want betting on that soft bull channel, though you gotta understand it is still early because this big trading range is still very much a thing. Early is okay, it just means the probability is a little bit worse, right? So we've been dealing almost with that 50% retracement zone here. on the whole day. Lower third. I'm going to take a small little bet on that channel. If I can get a fill, which I will. You see it's relatively small, wick low of 30. ATR 38. Bears! Now you want the range again, huh? I don't think so. Bulls, step on in. Let's put him to shame, man. Big ol' soft bull channel. Back up through that 50% retracement point. And I got my risk managed below the wick low bar 30. What's up, Bears? You got the wick low at 30 or what? Trading range or soft bull channel, man? Make your pick. All right, there's a close at 36, into the open at 37. Cut it right back into the trading range. Put that copier flat in there. All right, I'm flat. All right, let's see what else. Do we even look at a 2 minute? I mean, giant, right? Go back to a 5 for now. Or 10 out. Now, the problem with 91 on the 2 minute is that it's clearly a giant trading range, right? So until the Bears are able to actually prove themselves, we got a bunch of babies on both sides of the ball today. $205 out here on the 5. And we close at 37. All right, Bears, take out the wick low at 37. Try the wick low at 17, which is the low of day. We know you want to, so do it. And then the bulls can fade it right back up into the trading range. ATR on the 5 minute here, we're sitting at 40 and a half. Bears trying, man. They're trying to head down toward that low a day. All right, 236 out here. Give that wick low a 17. Let's see if the bears thread the needle. For a little stop hunt scalp. These bars are getting small. But it would really, really have to thread the needle. Like, stay basically right there. Because I don't imagine a break of 17 is going to go all that far. At least I'm not willing to bet on it. 2 minutes. Why do I think the stop hunt won't go very far? Because this is a big trading range. And that would be a breakout attempt beneath the wick low of 17. Now, if it does go far, we love it. We love it. That opens up a lot of opportunity. All right, down near 230. Got the wick low at 37. Oh, you bears! Let's see if they close inside the wick low of 37. Just inside. Oh, man. All right, Bears. You got it or what? Take out the wick low of 17. And then go about 7 points and reverse all the way back up to bar 35. Man, it's just range action. Would have been a hell of a lot nicer if 34, if we had continued back up toward high at day, we'd at least have some reasonable soft bull channel action. Now, if this can fade and turn into a big soft bear channel, that's tremendous. But that's going to take some time to develop here. All right, guys. I'll tell you what. We're coming up to noon here. I gotta tell you, I think we're probably gonna see a bigger move. Hold on to that volatility. Maybe we'll head back to the 40s, if not high 30s. I'd prefer all that this afternoon. So I want to be ready for that and try to take advantage if we do get it. Which means I'm gonna go hit lunch and let this figure itself out. All right. Happy Pharaoh Friday. Midas Monday. I'll see you guys then. Hang in there, man. Be patient. Range until it's not. All right. See you soon.